Okay, let me just go straight to the charts. Yeah, I mean, again, I think I showed these slides many times at the beginning of each webinar, because essentially, whenever I start the day, I go through a scan of the markets on the weekly and daily charts to understand whether the market is an uptrend, downtrend, or consolidation. Because once I have the bias, it's so much easier to plan the trade. Now, I don't want to sound like a broken record repeating this all the time, but this is a very important part of trading to me, trying to find what the market is trying to do by using price action. Okay, because once you have the bias, the other things will come, will flow naturally. Okay, so let me just go to the charts. Okay, let me see. All right, let me start with the indices. All right, so this is the S&P. Let me just expand the chart here. Give me a moment, yeah. Okay, so this is how the S&P weekly chart looks like. I mean, nothing much has really changed, is it, since it bounced off the 1800 level. I mean, nothing much has really changed. I mean, the price is just making its way higher and higher in a very lazy fashion. Okay, I mean, I did mention last week that we are back on the uptrend simply because we have broken the previous high of around 2020. And now it seems that you might want to test the top of the channel. All right, this channel has been very respected all the way from 2013. And the top of the channel, we're looking at 2100. Highly possible. Now, most of the indices look roughly the same. It's just bullish and it's just making its way slowly higher and higher. If you look at the daily chart of the S&P, same thing. You see the way it bounced off the 1820 level, no retracement, and it just keeps going higher and higher and higher. All right, so last week where we were, there's nothing much to analyze on the weekly and daily chart. Simply is a strong uptrend. Okay, but as a trader, it's not only enough to know whether it's uptrend, downtrend. It's very important to know how to plan the trade. All right, so let me zoom into a lower time frame so that we have a better look at the pair. Now, taking a look at the 4-hour chart. Now, last week where we were, okay, let me just highlight this to you. We were sitting somewhere here, 18th of November. Okay, and basically I was drawing up this consolidation area, and because the daily and weekly chart is bullish, there's high chance that if the lower time frame breaks a key resistance, it will continue upwards, and that's exactly what it did. Okay, so for those of you who are bullish on the S&P but did not get into the move, this is basically how you should plan the trade. Now, first things first, you want to look at the daily and weekly chart. Okay, I'm talking in the perspective of an intraday or a swing trader, which is who I am. So what you want to do first is you want to look for a daily and weekly chart. Ask yourself, what is your bias? Are you bullish or are you bearish? Okay, so basically look at the long-term charts first. Okay, you can use price action to say whether you are bullish or whether you are bearish. So price action, if it forms a series of higher lows and higher highs like that, so you can say that this is bullish. And you can use the weekly and the daily. This is what I use anyway. Okay, I only trade according to a daily chart. Now, if you notice, right, ask yourself this question. Which pair at the moment is trading whereby the weekly and daily chart is telling the same story? All right, you can quote me a commodity or indices or of FX pair. Which particular instrument is showing the weekly and daily chart? Okay, so sorry, I got some technical issues. Lenny, you say you can't see my chart, is it? Give me a moment, yeah. Okay, can you guys see it now? Still no. Okay, some say yes, some say no. Oh no. Okay, Rosie and Lenny, both of you can't see. Are you guys using the same computer? So far only 2 of you. The rest, most of them are saying yes. Let me see. Would you want to Yeah. So far, most of you guys are saying okay. Only Lenny and Rosie. Let me see. Okay, bear with me for a while. Let me just try to sort out this technical issue while the two of them can't see. Give me a moment, yeah. Okay, I restarted the screen sharing. Can you see it now? Is it better? Lenny, Rosie, all good? Still no? Not moving. Okay, Lenny and Rosie, because I think it's only both of you that you can't see the charts. Do you think you can just log out and log back in again? Meaning that just close everything and click on the link to go in again, if that's possible. Okay, thank you so much. But the rest okay? Okay, cool. Let's continue then. Where was I? Okay. Okay, so back to the S&P 4-hour chart. Now again, the main thing if to establish a bias is I like to see charts whereby the daily and weekly is telling me the same story because it's so much easier to trade. Okay, now one particular instrument that is very common, I mean that has displayed this characteristic is the yen pairs, especially a dollar yen, pound yen. It's basically the weekly and daily has been trending very nicely, and in fact a lot of the indices have been saying the same thing as well. So when the weekly and daily is trending very nicely, all right, and for this case upwards, what I want to do is basically if it's trading on the upside, if it's an uptrend, okay, I'm looking for support. Okay, and this is very important. I'm looking for key support levels, all right, on the long-term charts. And basically what I'll do is I'll zoom into short-term charts, for example, the 4-hour or the 1-hour, the 2-hour charts. And I will try to look for key support levels to try to take my trade and waiting for the charts to coincide with the longer-term charts. Okay, so for example, if the 4-hour chart is doing, if the daily chart is doing something like this on uptrend, but the 4-hour chart is doing something like this, or the 1-hour chart is doing something like this, I'm going to wait. I'm going to wait till it shows, it hits support, shows some form of support here, and starts making an uptrend. So once this happens, right, basically it tells me that, hey, my short-term charts are telling the same story as my long-term charts. And that's where I want to come in as a trader to try to follow the long-term trend. Okay, so basically this is how you want to plan your trade every single time. Okay, good. Lenny and Rosie, good. You guys can see, yeah? Awesome. Okay, so Sule is saying, so it must be confluence story again. Yes, it's all about confluence. It's all about stacking the odds. All right, so the long-term charts are very much respected. I mean, simply because a lot of big traders like hedge funds, banks use the long-term charts. And if you notice long-term charts, there's very little noise. Okay, I used to trade a lot on the 15-minute chart, 1-hour chart without looking on the without looking at the daily or weekly. But it gave me a lot of false breakouts. It gave me a lot of false signals, and after a while, you get very. I mean, your psychology gets battered. All right. So, but what I'm saying is that you can still trade a short-term charts, but always use your long-term charts as a reference. All right. And I always find instruments whereby the daily and weekly is telling the same story. All right. This is my own set of rules. You can form your own rules. But what I'm saying that if anything to learn from this year is that the trend is your friend. So use long-term charts as a guide. Okay. So let me just go back to the live analysis. Okay. So when the S&P broke, I mean, so S&P, we know that weekly and daily is an uptrend, right? And when the 4 hours started consolidating to this resistance, support resistance level, when it broke this key resistance level here last week, we are more inclined to think that, hey, the 4-hour chart is telling the same story as the daily and the weekly chart, and it wants to go up. So it came up, okay, it pulled back to the previous support, resistance turn support around the 2045 area. This one was a bit tricky because it pulled back a second time, made a slight lower low before shooting up again. Okay, so this one I admit it was quite tricky because on hindsight it's easy to say that okay, after it pulled back second time it shot up. But if you were at the point of time the live markets, right, some of you might be inclined to think that hey, this is a fake out. It broke out, pulled back, tried to break out again, and came down again. Alright, so for those of you who tried to long and lose money on this trade, it's totally fine. I mean, it's part of a trade plan because it did try to break out, but this was quite tricky and then it came up again. Okay, but what I'm saying is this. If you are sure that your long-term bias is long based on the trend, when a short-term chart breaks a resistance level like that, alright, it's a good cue to tell you that, hey, this is a good time to go long. Alright, because it's at support. Pullback, breakout, pullback to support level. Alright, so looking at where we are right now, we just delete all this. Looking at where we are like right now, I mean, the S&P looks set to test 2100. Now the question is, now let's say if you're bullish on the S&P based on long-term charts, right? The question is, where is a good place to take your buys from? Okay, my kind of trade is, I think I covered this before in the previous webinars. The way I trade is I always trade on pullbacks. Alright, if I see it break a new high, I don't just trade a high. So for example, this little breakout here, for example. Okay, now as a pullback trader, what I do is that I let it break out first. Alright, I want to see the strength of the breakout. So for this case, the strength breakout is good because there's two big green candles breaking above this resistance level here. Okay, and what I normally do is that I wait for a pullback. And normally I wait for a pullback into the previous resistance turn support. Okay, and then most probably I'll take my trade here. Where's my stop loss? My stop loss, depending on the risk to reward, it can be all the way here. Stop loss. Or if there's a swing here, I might put it here. If there's a swing here. So it depends on the market. Okay, but basically I'm taking a trade here and not here. You see a difference? I always wait for a pullback. Alright, because I feel that risk to reward, I think risk to reward is a very important concept. And if you take your trade over here, let's say if you long directly over here, your stop loss will still be in the same position as what I place to make sense. Because whether you long here or you long here, your stop loss will either be below this swing or below this support here for your trade to make sense. Okay, so for me, if you want to have a better risk to reward, pullback trading is definitely beneficial because if it pulls back for you, your risk will be capped, and if it goes up, you get a higher risk to reward ratio basically. Okay, so this is just a bit of how I place my trades and the kind of theory behind it. Yep. So where we are right now is, it is bullish. With daily chart is bullish, weekly chart is bullish. This is a 4-hour chart. Now what I'm looking for is basically a pullback to support levels. So if your target is 2100 based on the channel, okay, let me just go back to the weekly chart. So if your target is the 2100 level around here based on the channel resistance, then you need to start planning on short-term charts where is the support level you want to take the trade from. Alright, one possible support level is around the 2055 level. Alright, this is resistance and support. The other one is around the 2060 level. Alright, so these are two support levels that price might retrace to before shooting up again. Okay, so this is how I basically place my trade, starting from long term and using a short term to plan it. Alright, Sebastian has a question. Can I take a trade at breakout just above the resistance level at 2043? Okay, I know what you mean. So Sebastian's question is this. So let's say if you have a resistance level here, the market is doing this. What I do just now is that I basically like to wait for it to break out, see the strength of the breakout, and take a pullback. This is my way of doing it. Now Sebastian's question is, if he has a similar setup, okay, let's say market consolidating here, and the thing breaks out, Sebastian, most probably you're saying you want to take a buy entry somewhere here, right? That means at the point of breakout. Yeah, it is okay as well. It's really based on strategy. Your method is a bit more aggressive because I would say your method might work better for longer term charts, because shorter term charts, many of the time there's a lot of noise. So sometimes it breaks out and then it comes back in all the way again, and it's a false breakout. So for your method, I would say longer term charts are better, but it's a bit more aggressive. Okay, but regardless whether you take it my way or your way, your stop loss level should still be similar. Alright, because the good thing about taking pullbacks is that you're able to access the strength of this. Okay, because if the market breaks out, right, like that, and if it's some form of a candle which doesn't close convincingly above the resistance, forming a long shadow, right, this kind of breakout might not be the most convincing, so I will be a bit more cautious. Alright, so it depends. It's not wrong. It depends on what you're comfortable with, but just be aware of what are the pros and cons of each methods. Yep. Okay, let me just take this away. Okay, so this is the S&P. Now let me move on to other indices. So I'll cover the live markets, but I'll also cover theory and how I plan my trade accordingly. Okay, so that you can not only you not only know what's happening in live markets, but you can learn how to take a trade, how to plan the trade as well. Yep, so that is the S&P. The Dow Jones is very similar. Let me look at the Hang Seng right now. Okay, Hang Seng, this is a weekly chart for you. Now, again, first thing, bias. What is the bias of the weekly chart? So let's study this together, yeah? So the market has been making a series of higher lows. You see these circles I drew? I think I did this during the last webinar. These circles I drew. So a series of higher lows, higher lows, higher lows. This is a strong resistance and we have broken through. Okay? So the Hang Seng is still on uptrend to me unless it breaks this low here. Okay, unless the Hang Seng does something like this. Okay, then it's a change to the downside. But right now, it's not the strongest uptrend. Okay, but it's still a uptrend. Okay, an uptrend will not be broken unless a lower low is made. Okay, an uptrend will not be broken unless a lower low is made. Okay, so right now you got a higher low here, you got a higher high here, another higher low here. Now this is quite an interesting level here. This is what we call a lower high. Now a lower high can mean two things. Okay, a lower high does not mean that the uptrend has reversed. No. Okay, a lower high simply means that the market might consolidate, maybe into a wedge pattern, something like this, or it might be a start of a downtrend. Maybe it consolidates into wedge pattern and breaks a new low and it's the start of a downtrend. Okay, so but a lower high is quite key. It's not a start of a reversal, but it's a heads up that something might happen. Okay, so for this case, this is compared to this high, this is a lower high. So for the Hang Seng, I'm looking a bit for a consolidation or a reversal. So a consolidation is possible. Symmetrical triangle, yep, I'll call this an ascending triangle. Okay, I'll call this an ascending triangle. But basically what it wants to do, I mean, you can call it symmetrical, ascending, doesn't matter. All I know is that it's consolidating. This is resistance and this is support. So just be mindful of the Hang Seng. Of course, if it breaks this level here, okay, what level is this? Let me just take my normal tool. If it breaks the 24,700 level, then there's every chance that we might make a high back to the previous high, 25,300, and might break new highs. But as long as this 24,700 level is respected, high chance that it might consolidate into this symmetrical triangle, like what Lenny calls it, and just look for breakout on to either side. Okay, because it has formed a lower high, so it's a heads up that it might consolidate. Yep. So that's the Hang Seng. That's a weekly chart. Now look at the daily chart. Can we change this to daily chart? Okay, so looking at the daily chart, let me just erase all the previous drawings. Okay, the daily chart is a bit mixed. Alright, if you look at the, let me just draw some circles here. It was making a series of higher lows, and higher highs, higher lows, higher highs. This particular here is a break of the previous low. Okay, so as long as the daily charts remain below this resistance level around 24,000, I'm more inclined to think that daily chart is actually in a downtrend. Okay, the key thing here is made a lower low. So what it might do is that lower low, lower high, maybe another lower low, lower high, possible. Okay, so weekly chart is consolidating to me. Daily chart is in a downtrend. So what I'm looking for is more of a consolidation overall in terms of the Hang Seng. Maybe back to this support trend line, and then we'll see what happens. Of course, if it breaks to either side of this symmetrical triangle that I'm talking about, then you got to trade the breakout if you're trading in the Hang Seng actively. Okay, but most probably it's looking to consolidate in these levels. Alright, it looks very likely. Okay, so that's the Hang Seng for you. Let me just cover one more. Let's talk about the DAX. Okay, the DAX is a very interesting place at the moment. Now, you notice a lot of the indices look roughly similar. So this is the DAX weekly chart. Okay, I drew this channel a couple of weeks back, and basically it has just been trading within the channel. This area here was quite tricky because a lot of clients, including myself, thought that it's a break of a new low and might reverse to the downside, but it made a total V-shaped reversal back to the upside, back to the resistance level here. Okay, resistance have been broken, but here's another lesson for you if you want to trade breakouts. It's not, I mean, the first thing is this. Breakouts, normally you draw chart patterns, right? You can draw a channel, triangle, wedge, whatever. But it's not enough to just look at a resistance of a chart pattern. It's very, very important to look at something what I call visual resistance as well, or horizontal resistance. Now, if you notice that the 9,800 level here is a resistance level based on here, based on here, based on here, and based on here. So if you are very excited and say, oh, Nabil say that, okay, this is a nice channel breakout, I want to long, please be aware that right in front of you is a visual resistance at the 9800 level as well. Okay, 9,800 level. All right, so even if you see that it's a nice breakout, let's say I have a channel here. So even if you see that it has breakout nicely, right? Now, where you take the trade, again, there's every chance that the market might push further up. Okay, because it is a breakout. It is a nice breakout. The candle closed above the channel. But just be mindful what lies ahead, because there's another level of resistance here, visual resistance. So if you wait for a pullback, and if you take it here, still not too bad, because your risk to reward is still okay. Okay, but if you take it at a high here, basically you're taking quite close to the resistance, might not be the best idea. So for this case, you can either wait for a pullback, or you can wait for it to break the 9800 convincingly before taking up. Okay, so the DAX, it is bullish, definitely. Just be mindful that right now we're testing key resistance at 9800. And remember, when we are bullish, we are looking for support. Okay, now looking at the daily chart. Okay, looking at the daily chart. Just clear all of this again. Okay, daily chart, you can see that is very, very bullish. So basically it went up. I think last week I showed you this little bullish flag, right? This is called bullish flag formation. Yep, and then it was supported, bullish flag, breakthrough, and then it went up again. Okay, right now it's 9800. So if you're looking to buy, this is a classic example of how to buy in a retracement. You bullish, retrace, and then short up again. Okay, I think last week I did mention daily was an uptrend. So same thing, daily and weekly is on uptrend. Both are bullish. The DAX is bullish. So the key thing for you as a trader is where to look for support, where to enter a long form. If you're counter trend, of course you can short. But the main thing is if you're a trend trader, you're looking for longs, looking for support on the shorter term charts to confirm that it wants to go up before taking up. Okay. Hi, Mr. Ma. Thank you for coming. Where would be the pullback level you think? Okay, so let's plan something, right? Now, if you look at the daily chart, all right, again, we are looking for support level. Okay. Now, for those of you that are counter trend, again, it's not wrong to counter trend, right? Please sound out if you want to plan a counter trend trade. We can plan a counter trend trade, no problem. But I'm just saying that because I am a trend trader, I follow the trends very closely, so I prefer looking at the trends. But counter trend, you got to be aware that on long-term charts, this is on an uptrend. All right, so try not to pick tops and bottoms. Try not to just close your eyes and short and hope that it crashes through 9,000. Okay, if you want the counter trend, you can, but most probably it might work off the shorter term chart. So maybe you're looking at 9800 as a key resistance, and maybe you're looking to short on the 5-minute chart or 15-minute charts, for example. But right now, most of the charts are telling me bullish. Okay, so if you're bullish, if you want to look for support, the first level of support is around here, 9600 level. That's a quite interesting level to see whether the market will be able to respect. Anything above that, I'm not too keen because the levels are not too strong. I like the 9600 level basically. Let's look at the 4-hour chart. Let me see if I can see anything from a 4-hour chart. So the 9600 level was here. Okay, let me see whether I can draw some kind of trend line. Yeah, it's possible that the market might come down to test the trend line somewhere here. Okay, so this trend line is just a gauge, but basically I'm looking 960 is a distant support for me. Okay, at least on the longer term setup. Of course, some of you might say that, okay, I want to look at the 15-minute charts and I want to look up for a setup here. You can, but don't forget short-term charts, the support level on short-term charts might not be the best. So for example, if you say that, okay, this is a good support around the 9773 area and you want to take it up. So for example, if this is your level of support, you think that this is a good support level, and if you want to buy here, I'm just painting different scenarios so that you can go through a thought process. Yeah. So let's say it comes down here, you think daily and weekly is bullish, and you want to buy from here. Nothing wrong with that. You see a bit of hesitation, you take a long trade, the thing goes up, and then the thing breaks through. Okay. Now, how I will handle such things is that even though my long-term trade are still bullish, so long-term charts are still bullish, if it breaks through a short-term support and I've long, I'll be more than willing to get out first. Okay, then maybe I'll be waiting for the 9600 level here to see whether this support will be respected. Okay, but what you don't want to do as a trader is, if the short-term charts support gets convincingly broken, right? If it breaks lower and lower and lower and lower, you need to ask yourself, what is your risk to reward? If your risk to reward is, let's say you want to enter long here and your profit target is only back to the previous high here, okay, if it breaks through the support level, then you have no business staying in the loss. You should get out. However, if your risk to reward is quite big, let's say that you want to target all the way to 10,000, for example, let's say this is your profit target. Okay, and your stop loss, you're willing to put all the way below 9,000 here, for example, then yeah, maybe it's possible. Okay, maybe it's possible. But I'm just saying that your risk to reward is very important. If you are targeting just the previous high but it broke through a short-term support, it's better to get out first. Okay? I was bearish 2 weeks ago for DAX and shorter. However, I hit my stop line. I would like to wait for this week's news to plan my trade for the DAX. Okay, thanks for sharing that, Sebastian. You were bearish 2 weeks ago. Okay, okay, it's good to share your trades, yeah, because if not, I don't know what you guys need to, what you guys want to cover or what can I cover. But yes, thanks for sharing, Sebastian. So Sebastian says that he was bearish 2 weeks ago on the DAX. I assume 2 weeks ago was the time when DAX broke through the 9,000 level. Let me see. That was more than 2 weeks. It was almost a month ago. Okay, Sebastian, question to you is, 2 weeks ago, I assume is around November 10, which is this. My question to you is about 2 to 4 weeks there. Okay. So let's say, okay, a lot of my clients were bearish when the DAX broke the 9,000 level. All right, it is justified to be bearish because it broke a key support. And I was saying that when we pulled back, right, as long as we stay below 9,000, the downtrend might continue. But what happened is that it broke through 9,000 very convincingly, and I was wrong. Okay, it is okay to be wrong in your analysis. But the main thing is know when you're wrong and when to get out. So Sebastian said that he shorted around 9,000. I would say it's a good trade plan. So let's say, okay, let's say if we were here. Okay, let's ignore the previous candle. So let's say that we were here. So the market broke through a key support level and there's a pullback. So Sebastian shorted at 9,000. Now, what I'm trying to do is I want to go in the short-term charts to see whether the short-term charts change of trend to the downside when it hit 9,000 to confirm the weekly chart. Okay, because that's essentially a confirmation that the market might go down. You get what I mean? So weekly chart, we say that, okay, price has made a lower low, broke through 9,000. So we are bearish. It pulled back to the 9,000 level. So we want to, being bearish, we're looking for resistance, right? Now 9,000 level was a good resistance. Okay, because it was previously very good support. It broke through and now it is resistance. Okay. So if we are planning a trade, let's say we are here now and we see this kind of setup. So we want to lower our time frame and try to see whether the short-term time frame is reverse turning downwards as well to confirm our weekly bias. Okay, so if you look at the daily chart, again, I'm talking on hindsight, but just a bit of education, yeah. So daily chart, when was that? That was October period, right? 9,000. Yep, this circle I drew here. Now, I think I covered this. The reason why I drew the circle last week, I think for the very same reason. Now, this was a key level I was looking at. The question you ask yourself, now, even though the weekly chart broke a key support level, Did the daily chart reverse to the downside on 9,000? The answer is no. Okay, I always wait for the shorter term charts to confirm my longer term bias so that it can keep me out of trouble. So this is a classic example. So daily chart, there's no change of trend here. Okay, I'm looking for a change of trend to the downside to confirm, because if the daily chart shows something like this, right, goes up, hits a 9,000, make a double triple top, and then comes down. If it does something like this, then maybe I'm inclined to say, aha, my weekly bias and my daily bias is showing the same thing. This might be a good shot. But this is not the case, isn't it? The daily chart simply make a series of higher high, higher lows. No change of trend. The only thing it did was a bearish candle. That's about it. Okay, let's look at the 4-hour chart to see whether there was any change of trend there as well. That was during end October, right? Somewhere here. Okay, all these circles I drew during the last webinar session. Yeah. Okay, so this is a 4-hour chart of the DAX. Now, this was where it broke through, and this was 9,000 level. Okay, now you can see that this is what we call an inverted head and shoulders. So an inverted head and shoulders is a reversal trend. So for this 4-hour chart, it was in a downtrend. But when the inverted head and shoulders came in and when it broke the neckline, okay, you can clearly see that this neckline here around the 8870 level, this neckline here was respected and it started going up. Okay, so there was around the 9,000 level here, the only place that you could have entered a short was around here. But when you see it break above the 9,000 convincingly, and you see the inverse head and shoulders being respected, then you need to get out, because your trade plan to the downside is wrong in terms of the short-term charts. Meaning that the short-term charts and the weekly charts is not telling the same story, so better to stay aside. Okay, Mr. Rama said on 23rd and 24th, it showed weakness on the daily chart. Okay, 23rd and 24th. November, October. I will assume October. I don't see any weakness. No? A red candle is not a change of trend. A red candle is simply a retracement. October, yes. 23rd, 24th, there's no weakness. Okay. Let me see. Yeah, I don't see any weakness. Okay, and Sulian said there's an obvious bullish hammer. Yeah. I mean, you can use candlesticks or whatever, but I'm just saying there's no change of trend here. Okay, just making series of higher high, higher low, and the 4-hour chart gives the confirmation that it is still bullish because of the inverted head and shoulders. All right. So the only thing that I might see that might show that you want to short at 9,000 was that it made a lower low here, but other is shot up again. So when you see such price action, it's time for you to get out. Okay, so losses are a part of trading. Okay, but the main thing is cut your losses. This is one of the main things I learned in trading, is cut your losses. Because the first rule of trading is to survive. Okay, the second rule of trading, of course, is to grow your capital appreciation. But the number one rule is to preserve your capital and to survive. So cutting your losses is important. Even if you cut your loss and the market goes back to your initial direction, you can always enter again. Okay, even if you cut your loss. I know it can be quite frustrating. Maybe you wasted a few pips here and there, but it's better than keeping your losses. Keeping your losses can be very detrimental to your psychology, and it will not free up your mind to plan other trades. You will just be very emotionally attached to the trade. All right, if I see a trade that I'm wrong, I love to cut my losses. Okay, I'm very keen to cut my losses. I don't like to dwell on it. All right, so this is a bit of lesson. I'm just going a bit more in depth here so that you guys understand instead of just going through markets after markets. All right, but if you have any markets you want me to look at, sure, by all means. All right, so I'm going to move on to Forex now because I've taken up quite a lot of time. So now moving on to the Forex pair. So look at Euro Dollar. Okay, now Euro Dollar, if you look at the weekly chart. Okay, so weekly chart, very straightforward. Since the webinar started last month, it's been same trend, downtrend. Okay, it's basically made a lower low, lower high, and we just made another lower low. All right, so weekly chart, downtrend. Now look at the daily chart. Okay, now daily chart has been a downtrend, we have made a bullish flag, a bearish flag here, and it broke a support and continued downwards. All right, you notice how interesting. I like bullish and bearish flag formation, especially on the longer term chart. So if you notice, the second bearish flag was formed last week. So this was the first bearish flag, came down, second bearish flag came down. All right, the interesting thing is this bearish candle did not break the previous low. So you're looking at previous low around the 12350 level. Okay, overall trend daily chart is still bearish. So when my weekly and daily chart is bearish, I'm always looking for resistance to the downside because I am a trend trader. So one form of resistance that you want to keep an eye out for the euro dollar is basically this trend line here, as well as the horizontal visual resistance around the 12500 level. Okay, somewhere here. Let me just take away some of the lines. Okay, so this is the key level you want to watch out for. Alright, now some of you might say that, okay, this is a short-term resistance, 12435. Yes, it might appear resistance on the 1 hour chart, 15-minute charts maybe. But I'm not too keen on shorter-term resistance. I always like to look at longer-term charts. So I'm more keen on this trend line here, around this 12500 level. And what I'll do is that once the price reaches here, I'll zoom into shorter-term charts to wait for a reversal to the downside before I jump in. Okay. Again, if you want to have some case in point to see how the market turn, this trend line has been established since last week. 1 touch, 2 touch, 3 touch, 4th touch. So around this level here, this was around November 19. If you look at the 4-hour chart, where's November 19? Okay, this was a trend line area, resistance area. So if you use short-term chart to confirm, you can see that many times it tried to break, it didn't. And this was most probably a news-driven move, which is why it broke through. Okay, but the short-term charts has many signs that they were very key. There's a key resistance around here already. This is 4-hour chart. All right. So let me go back to the daily chart. So this is what I'm looking at. This trendline resistance. Use this to guide you. Now, if this resistance is broken through, high chance that we are looking to test near the 1600 level again. Okay, but because I'm a trend trader, I'm only bearish on euro dollar because of the weekly and daily chart. Still bearish. Unless it breaks a new high above 12600, then maybe you want to make a higher retracement. But as of now, still bearish. Have been bearish for months. Still bearish at the moment. Okay. Siulin has a question. In future, can you email me on individual part? You mean my individual trades? Unfortunately, I would love to, but I can't. Just basically based on licensing issues. I mean, I'll try to cover as much as a webinar to give you a heads up, but I can't email you my previous trades, unfortunately. But what you can do for yourself is what I do when I place a trade is I always do a screenshot. So for example, if I place a trade on euro dollar now, I do a screenshot like that. Okay, for me, I have more charts. I have like 4 charts, okay, but I'll do a screenshot and paste it in the PowerPoint slide, and every weekend I'll review to see whether the setup was good or not. Because screenshots give you a better journal than a Excel sheet, because a screenshot is able to tell you visually whether did you follow your strategy, whether the trade plan was good, whether is a good resistance support level. So screenshots is better for me than Excel sheets. So something that you might want to take. So if you have your own journal, at least when you come to webinars or when you meet up with me, you can try to review it and ask questions to see whether it's a good trade or not. Okay, that's something you might want to do for yourself, but unfortunately I can't share my own trades. Okay. Yep. Okay, so let me just move on to the pound dollar. Okay, pound dollar. Okay, so pound dollar, quite similar story to the euro dollar. If you look at the weekly chart, it has been one story since middle of 2014. Down, 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 down. Just simply lower low, lower high, lower low, lower high, lower low. Alright? Look in the daily chart. This is a trend line to look at. I think I drew this trend line 2 or 3 webinars ago, and it's the same trend line that is being respected. Look at how many touches there are. 1, 2, 3, 4, 5, 6. This was a bit tricky. A fake out. 7, 8. 8 touches to the trend line resistance. Now, this one here, right? Let me just take these circles away. Yeah. I just want to bring your attention to this little fake out here. This is exactly my point that illustrates my point when I talk about breakout trading just now. So even though we know that this is a resistance trend line and the market has broke out of the resistance trend line convincingly, don't be too eager to just take a long and think that it will go up, because right up ahead is a key resistance, visual resistance level around the 16180. See here, previous touch, previous touch, previous touch. So this is a classic example of, if you want to trade breakout, especially if it's against a long-term trend, be very careful of horizontal or visual resistance up ahead. It's not just a trend line, it's also visual resistance. Okay, so this trend line is very key to me. The pound dollar, again, back to this trend line here. Let's see whether we have a level around the 158, around 158. See what happens there. Okay, if not, again, longer term charts are downtrend. Just be very careful if you're looking to counter trend upside. But 158 is a key level. Trend line and visual and psychological whole number resistance. If it breaks 158, then we might look to come back all the way around the 1.6. But right now, I'm still bearish. And look around this 158 resistance level to see what happens. Okay, because this trend line is very key. Okay. All right, so let me see. Yeah, Celia, I mean, if you have any past trades that you like to email, by all means, send me an email. I'll try to look at it. All right. Okay, so that's the pound dollar. Now move on to Aussie dollar. Okay, Aussie dollar, now going to the weekly chart, quite similar to the pound and euro dollar in terms that it's been bearish for quite some time. I think Aussie dollar has been a bit more resilient. Right now is in a bit of a consolidation phase. Weekly chart is still on a downtrend though. Lower low, lower high, lower low. Okay, the key question is whether we will make another lower high here, or will we just consolidate around here. As long as the Aussie dollar stays below the 88 to 88.50 level, I'm more inclined to think that the bears are still in charge. However, if we break above this line here around the 88 to 88.50, then there's a chance that it might start going to the upside, maybe retrace higher to a 90 cents level. Okay, but as long as you stay below here on the weekly chart, I'm only interested on the downside. Now, taking a look at the daily. Now, the daily chart, you can see that it's a bit clearer on the daily chart, isn't it? It's forming some form of a wedge consolidation pattern. Okay, you can call it a wedge or symmetrical triangle, doesn't matter, it's just consolidating in the moment. Okay, so look out for breakout on either side. The low for 2014 has been the 85.50 level not long ago. Okay, so if it breaks through this level, then there's every chance that it might push lower all the way to 84 maybe. But if it breaks above, then maybe you want to consolidate higher. Now, where we are looking at, I'm going back to the weekly chart on the Aussie dollar. The next good level of support is around, let's see, the 84, 85. Yeah, around the 84 cents level. Okay, so if the previous 2014 low at 85.50 is broken, 84 cents is a high possibility. Just simply that the weekly chart is in a downtrend. So in this case, weekly downtrend, daily consolidation. If the daily chart break a key support level, which means that the daily and weekly will start confirming its bias on the same downside, high chance that the downtrend will continue. Okay, so this is how I look at. Is it not the flag on the daily chart? Yeah, it is a flag. I mean, you can consider a flag. I mean, this was a flag. Okay, this was a bit of a, I mean, I think I drew this last webinar. This was a flag here, and then broke downwards, came out, now consolidate again. So if it's a flag, I mean, whether it's a bearish flag or you know, symmetrical triangle, if the daily chart breaks the support and confirms my bias on longer term chart, I'm happy to take it down further. Okay, so that's the Aussie dollar for you. Now let's look at the yens, dollar yen. Sorry, Sonia, do you mean the one below, as in the daily chart, or the... When you say below, what do you mean by below? Is it on the daily chart, or the one below? You mean the one here? The one, this is a symmetrical triangle. Oh, okay. Yeah, I mean, you can call it a flag. I just call it seems more of a symmetrical triangle to me. I mean, but I'm saying that if this support level is broken here, right, then it just confirms the downside, and most probably will continue simply because the weekly chart is on the downtrend. However, if it breaks upwards, it does not mean that the weekly chart has a change of trend, okay? If it breaks upwards, most probably it's going to retrace higher, maybe back to 88 cents, and then we'll see what happens again. Okay, but I'm just using this triangle as a guide. Yep. Okay, so let's go to the yen pairs now. Now, a lot of the yen pairs, a lot of my clients who are looking for pullback trading opportunities, especially on a long-term chart, most clients are complaining to me that there's no long-term pullbacks. Now, very, very true. Now, it's just matter of adapting to a specific instrument. Based on experience for the past 1-2 years, after the BOJ start doing quantitative easing, the yen pairs, they do not pull back a lot on the long-term chart, especially when quantitative easing is announced. Looking at the weekly chart, right, you notice this was when the first quantitative easing was announced, and you notice how it shot up without a decent pullback at all. Weeks and weeks and weeks of green candles, almost 10 green candles there. So right now, I did mention that it might be the same story. So what we want to do as traders is, of course, if you don't want to miss the opportunity alongside, we need to look at the shorter term charts. Of course, I'm bullish, yeah. There's no two ways about it. I am bullish. Okay, and being a trend trader, I do not want to short any of the yen pairs at all, even if it's a 15-minute downtrend. No, I do not want to get my hands involved in any short. But on the uptrend, on the long-term chart, it is very, very bullish. Okay, when your fundamental and your technical lines up, all right, try not to go against it. Again, I'm saying it's not wrong to counter trend. If you are more suited to that kind of trading, it's fine. But I'm just giving my personal point of view that I prefer to trade the trend. It's so much easier. So weekly chart is very bullish. Let's look at the daily chart. Now daily chart is very bullish as well. Now look at the daily chart. There is no proper pullback at all. It's just one direction. Up, 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 up. Okay. So if you want to trade the dollar yen, you need to look at shorter term charts. Now the daily charts right now, it seems that there's a bit of hesitation now. 1, 2, 3, 4, 5. 5 candles could not break the 11850 convincingly. Okay, if you notice that from the October rally all the way to now, there is no period whereby there's more than 3 candles of consolidation. So you see here, 1, 2, 3, break up, 1, 2, 3, break up, 1, 2, 3, 4, 5. Okay, so maybe it wants to make a bit more of a pullback before going up again. Alright, so that's where as traders, we want to plan the trade. Now, let me just take a look at the monthly chart a bit longer down. I just want to see the resistance and see what's happening there. Okay, a lot of analysts, rightfully so, is targeting the 120 level. Let me see whether the 11850 is an interesting level as well. Yeah, it's possible resistance. I mean, not the strongest around here. But I think 120 will be a nicer, around the 120 will be a nice level. Okay, but what I'm saying is this: the daily chart is showing signs of hesitation a bit. So let's look for support on the short-term chart to see where is a possible area whereby bulls might come into play again. All right, now before I move on to the current trade plan, if you look at the 1 hour, 2 hour, okay, let me show you a 2 hour chart of the dollar yen. Okay, basically what I wanted to show you is this. If you notice that since October 15, when the BOJ announced additional stimulus, right, and then it broke the 105 level and then it just shot up. Now, some of you might miss this initial rally because maybe you're working or you're not in front of the screens and you might miss this initial rally. Now, I just want you to pay attention on how the market make many short-term retracements for you to join in the trend. All right, and this is especially so for the yen pairs. The retracement might not be a good retracement, might not be a good pullback, but it's still making pullback. So this was the first level here, around the 113 level. If you notice this level here, you notice that this was resistance, support, and support. Okay, another level that you look at is somewhere here. You notice this was resistance became support. Another level was here, resistance became support, and another level was here. resistance, support. So if you keep drawing all these line short-term charts, you notice that how this support and resistance just come to play with one another. Okay, so short-term charts for yen pairs very, very useful, especially if you want to join in a trend. Of course, on hindsight, it's easy to say, oh, you reacted on this support, you reacted with that support. Well, but what I'm saying is this: if you're planning a trade to join in the yen trends, right, the short-term chart support and resistance levels are very, very important. Okay, so don't always be mindful of that if you want to trade the yen pairs. All right, so if you look at where we are right now, this was a key support level here. So do you think this support might get respected again? Yes, highly likely, the 11740 level. But I'm also quite interested that this is a lower high compared to this high. So there's a chance that we might fall through here. What I'm looking for is this trend line here. Okay, so let me just join this up. Okay, I'm looking for this level here again to see whether the bulls have enough legs to push it up again. Okay, if not, the other support levels are here around the 117. Okay, if not all the way to 11650. Okay, let me just delete all these lines. So the reason why I drew all these lines for you is for you to give you a heads up to see how the 1 hour or 2 hour charts, you know, how the support and resistance come to play, especially on longer term uptrend. Alright, so my trading plan is very easy. If my weekly and daily chart says uptrend, I just want to look for support levels on the short term charts. I don't want to bother myself with any other things. It keeps my mind very, you know, it keeps things very simple for me. And that's how I trade, as simple as possible. Okay, so look at this trend line support for continuation and these two support levels, around the 117 to the 11740 level. Alright, if it breaks through this, then yes, we are looking at longer term support, but these two short term support might be respected, so keep a lookout for that. I have a question here, hold on, yeah. Which level should I plan to look at? Which support level? Okay, I just covered that. So yeah, look at for these two levels. These are two support levels you want to see. Now, the question is what you want to look out for at these support levels. Okay, you can look out for bullish engulfing candles. You can look out for a higher high on the short-term charts. You can look out for double bottoms. All these are signs that the support level might be respected on the short-term charts. Let me show you examples. So remember I drew a support level here for you. Okay, here you see how the market tested resistance, support. You notice how this candle here is what I call a bullish engulfing candle. Same thing for here. You notice this candle here, bullish engulfing candle. Okay, you notice here as well, bullish engulfing candle. So there are many signs that you can use candlesticks or whatever to confirm your trend. Okay, or confirm the entry. Alright, so these are the signs that you want to look out for when it hits your support level. Okay, so that's dollar yen. Now, any other forex pairs you want me to look out for before I move on to commodities like silver, gold? Any other FX pairs? All good? Euro pound. Okay, great. Okay, thanks for bringing this up, Mr. Ram. I think last week I did mention Euro pound simply we're at a key level. Okay. For those of you that were here last week, the reason why I mentioned Euro pound is because we're at a key 80 cents level, around the 80 cents to 80.50 level here. This whole level here was resistance to me. Now, I was saying that if this level breaks up convincingly, it might be a start of a strong euro and weak pound. Okay, so if you're trading euro dollar and pound dollar and you do not know which one to short or which one to long, you can use euro pound as a guide. So for example, if it breaks this 80 cents level convincingly, chances are that the pound will be weaker than the euro for the sustainable period of time. Okay, but right now what happened was this. After it hit this resistance, a big fat candle on the weekly chart reacted from it. And again, weekly chart, this is what I call a consolidation chart. No trend whatsoever. Okay, so it made a series of lower lows. See, from here, right, you got lower high, lower low, lower high, lower low, lower high, lower low. So it's a very nice, convincing downtrend. Another lower high, it made a higher low, which is the first sign that it might consolidate or might reverse, and then it made a higher high. But the things that are higher high is at a resistance level. So this whole thing here is just consolidation to me. Okay, so no trend on the weekly chart. Now daily chart is showing me, let me see. Daily chart, same thing, no particular trend at all because everything is just based on this key level around the 80 cents, 80.50 level. Okay, everything just based around here. Yep, so no particular trend. So if you're trading the euro pound, just be a bit careful. It's basically trading support and resistance. Okay, I mean, where we are right now, I would call it a bit of a no man's land, but resistance level is somewhere here, 80 cents, 80.50. Support levels around here. Anywhere in the middle, I'm not keen to touch it. Alright, it's up to you. I mean, some traders like to take short-term scalps here and there, but just be mindful of all these support and resistance levels. Okay, this trend line here, this horizontal support near 79 cents, and this resistance around 80.40, 80.50 level. Okay, but both charts are consolidating at the moment. Yep. Euro Aussie. Okay, let me just go with that. Euro Aussie. Okay, Euro Aussie weekly chart. Okay, weekly chart. Yeah, I think I went through this with you, Sunil, right? I mean, 2 weeks ago. Remember the circles I draw? So the reason why I drew this circle is because the weekly chart was on a downtrend, and then it made a reverse to the upside. This was a higher high compared to this high, and then it made a higher low. This was the circle level I drew because I remember I mentioned that as long as we stay above this support level, around the 14200 level, there's every chance that the market might push higher. So weekly chart is on the upside based on the price action because of this little swing here. It broke the high here. So higher high, higher low. Now what we want to look out for now, if the trend is to continue, is for it to make a new high. And then we can safely say that the weekly has changed or trend to the upside. Okay, right now this candle looks quite promising based on this weekly candle. Okay, so let's look at the daily chart for a bit more clues. Okay. Okay, now daily chart, daily chart is very messy. Okay, daily chart, I really don't like how it looks like simply because it's just range bound. And look at all these candles. Whenever I see a big red candle, a big green followed by a big red, another big green, very messy. Okay, I mean, if you want to plan the trade, I suggest you just wait for a breakout to either side of these levels. Because if it breaks this low below 142, right, it means that the uptrend is not intact on the weekly chart. Most probably it's just consolidating already. However, if it breaks the key resistance around the 146, then the uptrend is intact. But daily right now is very consolidating. Weekly is uptrend, not the strongest uptrend, but it's a bit mixed. So for me, I'm just looking at these two levels to have a bias on the Euro Aussie for longer term. Okay. So I hope you guys will be able to appreciate how I use different time frame to plan the trade. All right. After a while, it gets very simple. It's just trying to form plan the trade and tell you a story. All right. So Euro Aussie. Okay. Okay. Gold. Dollar yen, both weekly and daily charts are bullish. Do I need to put a stop loss? Absolutely. Okay, whatever you trade, a stop loss is very, very important. All right. Again, it depends on your strategy. I mean, I'm a big believer, or the school of thought that I come from is stop loss is the most important part of trading. I know some clients feel that stop loss always tend to hit their stops. I mean, the stop loss always seems to close out the position before moving into their direction. Then for me, if that's the case, then I'll look into where's your stop loss. Maybe you're placing it too near, or maybe you're placing it in the wrong location. But it's really up to individual. For me, stop loss is a big thing. So, sorry, Lenny was asking about dollar yen. Okay, so if you are looking for a dollar yen trade, right? So let me just go back to the charts, yeah? I think I went to the 4 hour, didn't I? Yep, this is a 4 hour chart. Okay, I think dollar yen, this was the trend line support that you're looking out for. Okay, I think right now it's testing it. I did mention the first level is around the 11740 followed by 17. This is the support level for you to look out for. Okay, now if I were to plan a trade, I will always put a stop loss below the support level. Alright, because if it breaks below, then I'm wrong. Then maybe it wants to retrace all the way to 116 or 115 even. Alright, but it all depends on risk to reward. What are you risking? What are you targeting? If you are just targeting the previous high here, okay, maybe back to previous high around 11850, okay, and let's say you enter it at around 11740, meaning from here to here you're probably targeting what, 11750, 50, 100 pips. So from here, let's say you enter here, okay, let's say if you enter somewhere, hold on, yeah, let's say if you enter somewhere here around the 11740 level, your target is around the previous high. Okay, that's about 100 pips away, right? So the question is, your risk to reward, is it equal? Or at least 1:1? Okay, because if, let's say if you are targeting, okay, let's say how about if you enter here, let's say if you enter this trend line here, your target is also the previous high. Okay, but you're risking all the way to here. This is your stop loss. Then the question is, does this make sense? It doesn't really make sense as well. Now, entering at a lower support level, yes, that makes more sense, because if you're targeting a previous high, the risk to reward is about 1:1. Entering at this support trend line here, but targeting the previous high, your risk to reward is most probably a negative one, which doesn't make sense. Okay, but whatever it is, I always use a stop loss. Okay, now I can discuss stop loss for a whole hour, okay, because there are a lot of variables to it, right? But because this webinar, there's a bit limited time, I'll try to incorporate that a bit more time after time. Okay, but basically stop loss, I always study previous swings to try to place it below it if I'm bullish. Okay, because if it breaks this swing, most probably is making a bigger retracement. Yep, I hope that answers your question. Okay, gold. Let's go to gold. Okay, for the gold is very interesting right now. Okay, I mean, it's quite interesting level where we are. Okay, so this is the gold weekly chart. Now, I did mention many times I was bearish on gold and silver since last 2 months. Gold recently because it broke the 1200, 1180 level, and I did highlight that it made a series of lower highs here, and this was a nice lower low that it made. Okay, the question is this. I was a bit concerned when I saw this weekly candle here, because even though this weekly candle closed convincingly below the support level of 1180, which makes me think that I'm bearish, this weekly candle is called a bullish pink candle, which means that there are quite a number of bullish or buyers around here. And then we trace upwards. Now, this is a classic example whereby the weekly chart and the daily chart is conflicting, which is why I'm happy to stay aside. Okay, so even though I was bearish on gold, it broke a nice level here. So weekly chart downtrend. Okay, if you look at the daily chart, if you see the manner at how it bounced up from the 1140 level, 1130 level, it's a bit concerning. So weekly chart down, daily chart up. So this is where I stay aside and let the bulls and bears fight it out first. I'm a retail trader. I do not want to be involved in the fight. I want to be involved when the clear winner is established. Alright, that's my mindset when I trade. So if you look at the gold chart, this is a daily chart. Daily chart is forming some form of a wedge. Okay, I'm still bearish based on the weekly chart. However, I'm waiting for a daily chart. I'm seeing how it reacts around here. Alright, anywhere between the 1200 to 1180 level. Let me just go back to the weekly chart. Okay, anywhere around here, I'm very interested to see how the market will react. If the daily chart starts forming a new lower low or form bearish engulfing candle, then maybe the bears are coming back into play and gold will start pushing down again. Highly likely. But right now the daily chart is still bullish. I'm willing to wait one side. But just look at this trend line and look at this area here to confirm it. Okay, so this is how a lower time frame might get you out of trouble or save you from entering a wrong trade. Because even though I was planning to look at a resistance level to take it down from the 1180 retracement, the daily chart kept moving higher and higher. So this trend line seems to be key to me. Now, if it breaks above this trend line, I need to be flexible enough to tell myself that this weekly breakout might not be a valid breakout. It might be a false breakout. Okay, this is the flexibility of a mindset of a trader. So if it breaks above this trend line and breaks above this resistance level, then maybe this is a false breakout. Then I need to start changing my trade plan already. But as long as we stay below this trend line, as long as we stay or hover around the 1180 to 1200 level, if the daily chart confirms that the markets want to bring it down, then most probably that the downtrend on the weekly chart is still valid. Okay, so keep your eye peeled on this goal level here, where we are right now. Okay, a key level, if it breaks back below 1185, I'm quite happy. Most probably the bears are coming back to play. Okay, so that's goal. All right, very interesting level we're looking at. So don't just jump in blindly. It's quite, actually, if you, Sebastian still here, or Mr. Rama, it's quite similar to the DAX, isn't it? Remember the DAX, it broke the key 9,000 level on long-term charts, but the daily charts that kept moving higher and higher and higher. This looks exactly similar to the DAX. The long-term charts broke the key level, but daily charts making higher highs, higher lows. So that's where there's a conflict. And when there's a conflict, it's better to stay away. All right, as retail traders, we want to trade on the clearest trends, on clearest patterns. Okay, so any other last markets that you want me to look out for? Oh yeah, Lenny, you wanted me to look at Gilead Sciences, right? Are you still here? Let me just have a quick look. Now, Gilead Sciences, let me see. Are you still here, Lenny? Okay, I'm not sure whether you're still trading this, yeah, but Gilead Sciences is still on a very bullish uptrend. It's simply forming a series of higher highs, higher lows. Now, right now, the support level is at 100. A whole number support, very strong support. Okay, I know that it pierced through the 100 level, but this is a long shadow. A lot of bias here, but 100 is a key support level to look at. Look out for a bit of consolidation. It might consolidate sideways here before going up, but weekly chart is still very much on uptrend. Daily chart is a bit a different story. Daily chart is definitely consolidating. Okay, right now there are two things you want to look out. Okay, this area here is very important because a lot of multiple support levels here. You got this trendline support here, you got horizontal visual support, and you got psychological whole number support at 100. So this area I'm keen to look out for. You can look at the 4-hour chart, 2-hour chart to see whether there's any support here in terms of bullish engulfing candle or any double, triple bottom. Because if that's the case, then most probably traders might want to take it up again. Now, whether you want to break an all-time high, I'm not too sure. But if this support is respected, high chance that it might come back to the previous high of around the 110 level. Okay, because maybe it might just want to form a kind of ascending triangle. Okay, but if you take it from a good support level, there's still points to be made. Okay, that's Gilead Sciences. All right, any other questions or any other instruments? I exceeded my time as usual. But I mean, the main thing I don't want to just cover live markets, support resistance. I want to go through, drill into the thought process of how to plan a trade, what to look out for. That's more important. Because after that, you can plan your own trades. You don't need me. Okay. If we always trade on the higher high, sorry, are we supposed to be more and more conservative? Okay. Okay. I'll let you type your question first, Roy. Let me address Winter. Winter is asking me whether I can draw a trend line for the Singapore blue chip. Okay, let me just go through a Singapore blue chip, yeah. Okay, the Singapore blue chip. Okay, Singapore blue chip weekly chart. Let me just go through that. Okay, the Singapore blue chip is, for me, is consolidating. Okay, let me show you why. Okay, now we're testing a key resistance level. It broke a lower low. You see this here? Lower low. It broke this low here. And right now, it might form a lower high. I know the short-term rally has been quite strong. But as long as you stay below this resistance, right, this whole area here is just consolidating into ascending triangle, which might get tighter and tighter from time to come. Alright, but this near the 37830 level is key for me. If this level is broken, right, okay, high chance that you might meet the 384 or you might make a new high even. Okay, but this is a trend line that you want to draw. here, here, there are many touches. So this is quite a nice trend line. If this level is respected, most probably we're just marking around this ascending triangle. Okay, so this is a key level to me. Now daily chart is bullish. Okay, but just take note of that weekly resistance level around here, around the 378-380 level. This is a key resistance level. Okay, so but daily chart is bullish. So this is where I told you the weekly and daily is a bit conflicting, which is why I'm not really keen on this chart. But just be mindful that we are touching a key resistance at the moment. Okay, now let me just answer one more question. Yeah, give me a moment. Okay, Roy, sorry, let me get your question now. If you always trade on higher high, it's supposed to be more conservative. So try to give up more. But suddenly they try to get more key. Your question, sorry, I don't really get your question. If we trade on a higher high, you mean higher time frame or higher high swing? Because if you're talking about higher time frame, I mean, one thing to note is that the higher time frame, the trends can last for a very, very long time, especially when it's, I mean, higher high swing. Okay, if we trade on a higher high swing, okay, since they cannot go. Okay, just a quick question on price action. Yeah, if I trade on a higher high swing, which means that it's on an uptrend, right? That means it's for me it's higher high. What I'm looking for is always a higher low to enter. This is a higher low. Okay, so I know that is higher high cannot go up perpetually. Okay, but my job as a trader is not try to predict the markets too much, but it's just to follow the charts. Now, a lot of times we are very focused on predicting, forecasting, or a lot of analysts like to give like year-end forecasts or 2015. I mean, it's good to give a heads up or give you direction, but I being a technician, right, being a technical analyst, I learned to trade just following the charts. All right, I'm not too keen to try to predict what might happen next year, next few months, but I'm focusing on the chart. So as long as the chart is making higher high, I'm just following up. Yep. So Gabriel has a question with regards to indices, Wall Street in particular. Is it healthy to see such bullish rally with no pullback? What can we expect from such behavior? You are spot on, Gabriel. I mean, all the indices, the way they're moving in particular is not healthy. The way it's moving up is just one direction. There's no healthy pullback, but it is what it is. No, it is what it is. I mean, simply because when I mean, that's why they call this rally the central bank rally, because since 2012, 2013, after the credit crisis, all the banks are doing just printing money, buying bonds, doing asset-backed purchasing programs, stuff like that. So all these basically just pumping cheap liquidity into the money, into the market. So it's really hard to look for healthy correction. How the market, I mean, I speak to some clients who have been a trader, who have been in the market for the past 20, 30 years. Even them, they have not seen the markets like that before. So, which is why for me, technical analysis is even more important, because fundamentally, even though it does not make sense, the charts are moving higher, I just follow it higher. As simple as that. Whether when would there be a healthy pullback, I don't know. It's really hard to predict. Maybe, I mean, we did discuss this, or I did discuss this with many clients when S&P was approaching 2,000. A lot of analysts were saying they will hit 2,000, it might pull back. Yeah, it did pull back close to 1,800, but after that, what happened? After the BOJ announced fresh stimulus, all the market just rally, almost like a V-shaped reversal. So whether there will be another next corrective pullback, I don't try to predict. As long as it keeps going up, the chart, I just follow it. Yep, I hope that, I mean, I'm just giving you a point of view from a technical analyst person. Sorry, Roy, at the beginning of the trend, we are more keen, but, oh, I see. Okay, I can understand. Okay, Roy was saying that if, on the uptrend, right, in the initial uptrend, when the first higher high is established here, is less, what you're saying that is a lesser risk trade because the uptrend just started, but in the peak here is a bit riskier. You're absolutely right, Roy. I have no cons about that. You're absolutely right. I mean, the challenge is for us to spot early change of trends. That's why I was very keen on gold and silver when the long-term charts broke a new low, because that might signal a key reversal in terms of the markets. Okay, I mean, just let me bring you to the silver chart, for example. Yeah. I mean, if you see the monthly chart, okay, if you see the monthly chart for gold, let me just get rid of my diagrams. If you see the monthly chart for gold, now I just want you to pay attention of a few trend lines that I drew here. Okay, now if you notice that when this trend line broke out, right, you see the 188 level, when it broke out to the upside, you notice how it just shot up, the trend continued. Same thing when it broke down. Okay, so when a new high was established here, I know this wasn't a clear high in long-term chart. You probably need to look at the weekly or daily chart. But when this new resistance was broken out and the new high was formed, you notice how the trend continued all the way to almost 5,000. Same thing here. When this 2650 level was broken, when the new low was made, you notice how it just continued lower high, same low, even though it consolidated, just continued downwards. Alright, so what I'm trying to say that if a long-term chart, especially monthly or weekly charts, form a new high, a new low, I'm very keen on it. Okay, because it might be a start of something sustainable. Okay, but if not, for example, the yen pairs, right? The yen is a different story altogether because it's very fundamentally driven by cheap money. So for the yen pairs, even though you think that it's gone up for so much, especially on the longer term charts, right? Try to just follow the chart. Use short-term charts to just follow the trend. That's the easier way. It's just the nature of the yen pairs and fundamentally what's happening at the moment. All right. I know, like for yen, I mean, when it hit the 115 resistance, a lot of my clients saying, wow, a bit too high already. Even though the BOJ announced stimulus a bit too high, it might come down soon. But look what happened, it's just moving higher, higher, higher. So if you keep trying to wait for the big correction, you might not get into the trend at all. Alright, so this way you can use short-term charts to try to plan your trades. And using short-term charts can help you manage your risk as well. Because let's say if you take a long on the short-term charts for the yen pairs, if it breaks through a support, the most you're stopped out, you get out. No big deal. Alright, so that's this way the short-term charts can help you. Okay? Alright, if not, thank you so much for all your questions. I really hope, again, I presented way too long. All this will be recorded. If you guys have any other questions or anything, feel free to email me. If not, thank you so much for attending. I hope to see you next week and hope you learned something from today. All right, thank you. Have a good trading week. Take care.